Today is August 30, 2022, and this is Tony the Bull back with another crypto technical analysis update for News BTC. We are coming down to the wire here in the month of August with less than 48 hours remaining until the monthly candle close. This month is especially critical for a number of pivotal reasons, which we'll review next. The first and most important factor weighing over the next couple of days in the crypto market is a looming TD9 buy setup. The TD sequential is a market timing indicator. Simply reaching a 9 count is enough for a buy setup, however the signal is much stronger when the series is perfected. This can only happen with a sweep of the current low below around 17,500. It would require a breakdown of all-time high resistance turn support and a breakdown of a decade-long monthly trend line. Moving right along in our monthly analysis, Bitcoin price continues to rest on the lower Bollinger Band, a first for the first ever cryptocurrency on a high time frame chart. What we don't want to see is price action close outside the lower band, which could lead to an explosive down move. Despite this risk, there are several signs that a bottom could also be in. The monthly momentum on the LMACD histogram and relative strength index could be signaling a hidden bullish divergence. Stochastic is also nearing a turning point after reaching oversold conditions. Another recurring bottom setup, especially when combined with a breakout of downtrend resistant lines. If the TD9 buy setup on BTC USD monthly chart is to be perfected with a new low, it could trigger the final wave of an expanded flat correction that I have in the past presented as the bearish scenario where a bottom isn't in yet. If this happens, significant damage could be done to Bitcoin, resulting in a more extended bottom like the 2014 and 2015 crypto bear market. Let's next look at the culprit behind the ongoing Bitcoin correction and why there are such similarities with the 2014 and 2015 bear market. Remember, one half of the BTC USD trading pair is the dollar. This means that when the dollar is strong, the BTC side of the trading pair takes a beating. The best way to gauge strength of the dollar is through the DXY, the dollar currency index. This is a weighted basket of top world currencies trading against the dollar. Much like Bitcoin is reaching oversold conditions with a possible hidden bullish divergence, the DXY is overbought and potentially forming a bearish divergence on the same indicators RSI, LMACD, and Stoch. The similarities to the 2014 and 2015 bear market versus the most recent bear market in 2018 appear to be due to dollar strength. The last time the DXY was this overbought was during what's known as crypto's worst bear market ever. Plotting BTC USD behind the DXY, we can take a closer look at the possible correlation or anti-correlation. The last extended up move in the DXY is what led to such a lengthy bear phase in crypto. Interestingly, the Bitcoin plot at some points appears to be acting as dynamic support and resistance for the DXY, perhaps showing off an anti-correlated relationship through the trading pair. Bitcoin has bottomed each time the DXY has pushed above the BTC USD plot line. Bear markets arrive during DXY up moves, and Bitcoin performs well when DXY moves sideways and the best when the DXY is falling. With the DXY potentially at oversold conditions on the monthly time frame, a pullback could be near or even a complete trend change that is ultimately something that lifts Bitcoin out of its bear market. That's it for today. This is Tony the Bull Spilotro. Self-education is the best investment you can make. Remember to subscribe, like, share, and leave a comment with feedback.